Which of the following organizations bring out the publications known as World Economic Outlook? So there are many publications made by certain international organizations. In fact, I suggest you not to mug up all these publications. So we have the list of all the publications in the website toothepoint.in. So I would suggest you people to refer to this particular document once in a while instead of mugging up all those publications. But let's look at this particular question, World Economic Outlook. In fact, World Economic Outlook and other publications, something called Global Financial Stability Report. Global Financial Stability Report. These are the biannual publications of International Monetary Fund. Both World Economic Outlook and Global Financial Stability Report are biannual publications of International Monetary Fund. So for rest of the publications, you just go through this particular website. This would help you. With reference to Union Budget, which of the following is or covered under non-plan expenditure? So from the current budget of 2017-18, the latest budget, we don't find the budget being categorized into plan and non-plan. Right now it has been changed into scheme based and non-scheme based expenditure. I mean expenditures other than schemes. But before this particular budget, we used to categorize, I mean the government used to categorize the entire expenditure to plan and non-plan. What would be categorized in general as non-plan expenditure is simply the maintenance or the consumption expenditure. Maintenance or the consumption expenditure. Mostly the recurring expenditure. The recurring expenditure or the expenditure that is the government is bound to spend, like the salaries, the subsidies, anything the government is mandated to spend on any aspect of the economy is said to be categorized as non-plan expenditure. What comes under plan expenditure? The grants allocated in the name of demand for grants, wherein the ministry spend for the sake of spending money for certain plan objectives, the annual plan objectives, that would be categorized as plan expenditure. And the very common maintenance expenditure or consumption expenditure used to be categorized as non-plan expenditure. So if you look at the options given, subsidies is something you are bound to spend, because once you make a promise that you are going to implement a particular scheme which is a subsidy based scheme, let's say food security act, that is something you are going to spend, allocate certain amount of money every year. So this is a non-plan expenditure. Salaries is something again a consumption expenditure or a maintenance expenditure. Interest payments on the loans borrowed, you are bound to repay the interest. Similarly, you need to maintain the defense personnel. Henceforth, all these options would be categorized as non-plan expenditure. The sales tax you pay while purchasing a toothpaste is. So you might be knowing as of now, in fact both sales and purchase tax are of state subjects. So if you have gone through the 7th schedule of the Constitution, you can easily make it out which particular item is part of which list, whether it's a part of central list or state list or concurrent list. In fact, these lists itself would let you understand which particular organ of the state has the right to levy, collect and appropriate a particular tax. Sales tax and purchase tax or taxes levied by the state, collected and appropriated by the respective states. So tax imposed by the state but collected by the central government, tax imposed and collected by the state government, tax imposed by the central government, tax imposed by the central government but collected by the state government. So in fact, there is no role for the center to play any role when it comes to state tax. So in fact, it is the D which seems to be the appropriate answer. What does venture capital mean? Venture capital simply refers to investment made in the startup industries or certain innovative companies. So there is a slight difference between venture capital are venture capitalists and angel investor. Many a times you might be confused about these two categories of investments. So, venture capitalists are those who pool money from the public and invest in a startup or a innovative company. Angel investor is the one who invests his own money, in a startup venture or a certain innovative upcoming industry. He is said to be called as an angel investor. So, if you look at the options given, a short term capital provided to industries, a long term startup capital provided to new entrepreneurs, funds provided to industries at times of incurring losses, funds provided for replacement and renovation of industries. So, the most appropriate answer in this case, a long term startup capital provided to new entrepreneurs. This is what is the capital has been. With reference to balance of payments, which of the following constitute current account? As we already discussed about balance of payments, it broadly consists of current account and capital account. So, in one of the previous discussion I have said, anything that alters the assets and liabilities of an anything that alters the assets and liabilities of the economy would be categorized as capital account. Anything that has an impact on the income of the economy is said to be categorized as current account. So, the simple way of remembering is anything that is recurring in nature would be categorized as current account, and mostly the non-recurring transactions a nation makes with rest of the world would be categorized as capital account. So, like the investments, borrowings, grants and aid, they would be categorized as capital account, and mostly the trade, exports, imports, remittances, interest money and profits from the investments or profits from the factors of production owned by Indians abroad, these would be categorized. These recurring sources would be categorized as current account. So, if you look at out of all these options, balance of trade, yes, definitely trade is a recurring part and it alters the income of the state. So, henceforth this would be part of the options answer. Special drawing rights. In fact, special drawing rights has nothing to do with the balance of payments exclusively. This is something related to a member allocation made by the IMF to its member country, wherein the respective nations can draw these special drawing rights in case of fall in forex reserves in order to meet their global demand, global trade. Balance of invisibles. Yes, balance of invisibles refers to the invisible part of current account, that something refers to trade in services, remittances and other form of income, maybe the income earned from the interest. So, 3. Foreign assets. Assets has nothing to do with the current account. So, 1 and 3. So, C is the correct option. The term marginal standing facility rate, net demand and time liabilities sometimes appear in news or related to banking operations. Needless to explain, many a times you might heard about when you define various reserve ratios like CRR. How do you define CRR? Simply a percentage of net demand and time liabilities that the banks has to maintain in liquid form prescribed by RBI. So, the rate at the amount of money one has to, the amount of money the banks has to keep aside out of the total net demand and time liabilities is generally what we call as CRR. So, in this case NDTL refers to the total deposits. So, we will be discussing about in brief, in fact in detail we will be discussing about all these technical aspects in monetary policy. And at the same time, marginal standing facility, in fact this is a facility that has been introduced by RBI during the financial crisis of after the financial crisis of 2008-9 in order to ensure banks would be able to have large supply of liquidity. So, in order to increase the liquidity of supply during the crisis period, the RBI has come up with one more monetary instrument, that is what is called as marginal standing facility, and the rate of interest charged as part of marginal standing facility is said to be called as marginal standing facility rate. So, both of them has to do with the banking operations. which of the following, in the context of Indian economy, which of the following is or the purpose of statutory reserve requirements? So many a times you might heard about every bank has to maintain certain reserves, and out of the reserves we broadly, if you look at, there is CRR and SLR. SLR in fact itself is said to be called as statutory liquidity ratio. Statute does mean by law or by order. So by law or by order, the amount of money the banks has to maintain in certain designated liquid form prescribed by RBI is said to be called as statutory liquidity ratio. So let's look at what would be the basic purpose of it. To enable the central bank to control the amount of advances the banks can create. So in fact, before looking into these options, let me try to of what exactly is SLR. SLR is simply the percentage of net demand and time liabilities. So keep it in mind, mostly it is nothing but total deposits that the banks has to maintain in certain designated liquid form, mostly in the form of gold or in the form of foreign currency or in the form of government bonds. The reason why RBI suggests banks to keep aside certain money in the form of gold, foreign currency or government bonds is to ensure that at least certain proportion of money would always be safe, because if you look at in any economy like in India, these are the three this seems to be the best form of investment by any organization. So if you purchase gold or if you convert your amount of money into gold or into foreign currency or into government bonds, that remains safe and they have a better chance of appreciation rather than lending all 100 rupees that you raise from the markets to the markets, because lending money to the markets might lead to exposure of banks to high defaults. Higher defaults leads to increase in non-performing assets, and henceforth the RBI suggests bankers to keep aside certain money in the form of gold, foreign currency or government bonds. So this would help the banks to keep certain money in the form of safe assets so that they don't need to worry. So minimum certain proportion of money would always be safe, and that would ensure that the banks would not be completely bankrupted. At the same time, it also guarantees to the customers that certain proportion of their money is always in the safe form of investments. At the same point of time, the compulsion of banks to maintain money in the form of government bonds would also ensure that the government would be able to raise money from the banks by selling the government bonds. So that is how SLR is going to try to ensure banks would be safe. The interests of the customers should also be safe. The reason certain proportion of their money is always in the safest form of investments, and that would at the same point of time the SLR also ensures the banks would be lending certain proportion of their money they raise in the name of deposits to the government of India by purchasing government bonds. So now let's come back and look at the options. To enable central bank to control the amount of advances the banks can create. Of course, if the SLR is going to be high, if the banks are mandated to maintain very high proportion of their reserves in the form of SLR, the amount of money they can lend to the markets would be relatively low, and that's how by altering SLR you can control the supply of liquidity, and henceforth you can obviously control the amount of money you can lend to the markets. To make people's deposits with the banks safe and liquid, of course that's what we have discussed. To prevent commercial banks from making excessive profits. So the purpose of SLR is to ensure that certain proportion of assets of banks would be safe, not to ensure commercial banks should not be making excessive profits. In fact, the interest of any central banker for that matter is to ensure that commercial banks, or for that matter any other bank, would be able to make better profits, but not to restrict their ability to make profits. So henceforth option 3 is wrong. So anything with 3 is a wrong option. So henceforth 1 and 2 seems to be the correct option. If the interest rate is decreased in an economy, it will. So if the interest of the money comes down, so what happens? It simply the logic is going to be as simple as if the price of a particular product comes down, people tend to demand more of such products. Similarly, when the interest of money comes down, the demand for money goes up. So let's look at decrease the consumption expenditure in the economy. So when money becomes cheaper, does it decrease the consumption expenditure or increase the consumption expenditure? So people tend to spend more money when they get loans at a cheaper rate of interest. In fact, that would boost aggregate demand. So consumption in fact increases rather than decreasing. So this is not a correct option. Increase the tax collection of government. So you cannot necessarily say that it would boost increasing tax expenditure because it has no relation directly with respect to tax collection. Increase the investment expenditure. Obviously, any investor, when he gets to know that he could get the money at a cheaper rate of interest, prefers to borrow more money for the sake of investing, borrow more money for the sake of investing in the economy, and so it increases the investment expenditure in the economy. Increases total savings in the economy. So if you look at when money becomes cheaper, people tends to spend rather than people save money. So henceforth C seems to be the most appropriate